Hello everyone, very good evening to all. Welcome you all in the session of Oliveboard. I hope you all are fine and doing well. So yes, please confirm my audibility and visibility. Is everything fine? Perfect. Can we start today's session? Please confirm me everyone in the comment section box. I guess everything is fine, everything is perfect. Okay, now let's start the session. So yesterday we did unit number 21 about STP, and what else we completed yesterday? Can anybody tell me? About credit delivery. These two topics we did yesterday. Now, see, in this particular unit, what we will going to learn about the credit control and credit monitoring. Af See, we have seen that when we have to apply for the loan, we provide the loan application. Okay, after that, the loan appraisal is done. After that, the loan sanctioning takes place. After the loan is then loan disbursement is there. Clear? After the loan is dispersed, now it's time to supervise and monitor the every activity. Okay, I have given you the loan. You are the borrower. I have given you the loan. Now it's my duty that I need to supervise that for what purpose you have taken the loan. Like you have taken the loan for education purpose. So now I have to monitor that really you are using that loan in education purpose only. It's not that you are taking the loan in the name of education purpose and you are using that loan for personal purpose. No. So there should be a proper control of credit and proper monitoring of credit. So these are very important for the safety of the bank's advances. Now, before starting today's lecture, so yes, this is a selection batch, so please do join the selection batch all in one course. There will be a lot of classes will be provided to you, early morning, late evening classes. You all can download the PDFs. Then you can, if you have not watched the live session, so there is still the recordings. You can watch the recordings as well. And the medium is in English and Hindi. So do enroll now because there's a off for Mahakumbh special and it will end on 19th of Jan. So we are providing you a 49% discount is there from the Oliveboard for your JAB and CIB subscription. So please do enroll now. And you can use the code this special. Now, what is credit control? So we have seen just now that we need to control the credit. So it involves different tactics, different strategies, practices of business employees to manage their credit, which they provide to their customers. So where it is very important to control the credit. So how you can control the credit? The primary goal is to ensure customers can pay their debts when the repayment date comes. They are obliged to pay their debts. They are obliged to pay their dues. Key functions of credit control: the customer assessment, that we need to assess a banker need to assess a customer's credit worthiness, that will this customer will return the loan or not, will this customer will repay the loan or not, the payment history, the credit history of the customer, that is the assessment of customer. Then the limits. So limits should also be set for customers based on their financial stability. If I know that I have seen the history of this particular person, I have seen that this person salary is just 30,000. So how would he repay the loan of, let's take 50 lakh? No, he can't repay the loan. So that is why the credit limit should be provided according to the payment behavior of the customer. Terms of the payment should be mentioned, that when the repayment date comes, you have to pay in terms of in way of cash, you have to pay in through check. So it should be communicated clearly verbally as well as it should be written down. Approval process. So there should be a proper approval credit request. A system should be established for approving credit requests and monitoring large transactions. So in this way, we can control the credit of our bank. Now, credit monitoring. Monitoring means what? Looking, okay, controlling all the activities. So credit monitoring involves what ongoing process of tracking and reviewing customer credit activities. That this customer, this particular borrower has taken the loan. So will this borrower will return the money back or not? For the purpose of the loan this person has taken, is the purpose is being fulfilled? Like he or she has taken the loan in the name of education purpose and using as for personal purpose. So this is entirely wrong. If you want personal loans, then you can go and ask for the personal loan. Why you are taking in the name of education loan? All these things we need to monitor that to ensure the compliances and to reduce the risk which will come in our way. Follow up actions to remind the customers that their due date are coming, you have to pay, you have to repay your amount, so that when in order to resolve all the disputes that will come, that will arise. Now, next is risk alert. So yes, we know that using different tools, using different tactics, techniques, you can minimize your risk. You know that you have identified your risk. You know that this particular person might become a defaulter on the due date. He might do the default. So you need to make a proper tracking record of that person, of that customer, so that they may not do any kind of, you can say, wrong behavior to your bank, to your company, such as declining payment or changes. So credit control and monitoring, often referred to as loan review mechanism. So they are also known as loan review mechanism. Loan review mechanism is a type of mechanism where we have to review the loan. The purpose of loan we are granting, the banks are granting to the borrowers. Are they taking the loan for the same purpose only? To ensure that the funds provided by the bank are put in the intended use and continue to be used properly. Are they taken for the same use, and are they the use is properly done? It's not that the money is used in any illegal work. No. Ascertain that the business continues to run. The business is an ongoing process, a perpetual action. And if the deterioration of the business continues despite appropriate action. See, suppose you have taken the loan against the securities, against the shares. Okay, this is the borrower. This borrower has taken the loan from this particular bank against securities shares. Here, this borrower has taken the loan from this bank and shares. So they will be using in a very low rate because the rate is very low. This borrower has taken the loan on the basis of such securities, and the value securities and shares goes down. So in order to such kind of activities may not happen, in order to remove such kind of activities, the harsh action has to be taken by by the bank. That bank will ask more securities. A time will come, or bank will say, "Ki your value of the shares have gone very down, so it will hamper my business. It will hamper my banking structure. So I want to take action, or I'm recalling for the advances, or seizing the security." So if the deterioration of the business continues, okay, so bank may take the harsh action. Now, what are the available tools for credit monitoring? So there are variety of tools for monitoring credit, but RBI says that bank should not depend upon the, you can say, upon the certificates. What kind of certificates? Like the CA has given the certificate that everything is true and fair view. Okay, the company is representing the true and fair view. Nothing wrong in this. No such kind of expenses is being shown. Everything is perfect. Okay. So RBI says that no, a bank should not rely on the certificates of chartered accountant or the certificates of any institutions which will provide the profitable business. No. Bank should not rely on these. Bank should go and they should visit, they should do the personal observation. RBI has revised that bank should not depend entirely on the certificates which is issued by CA or from the borrowers about the utilization of funds. In case of incorrect certification, a prompt action has to be taken. So it's better that you should go, you should you yourself personally observe the things, all the legal sanctioned records you have to do as well. So it is the duty of the bank that they should not rely on such kind of activities, on such kind of certificates. Rather, they have to visit, they have to see the records, they have to see the information, they have to see every detail before providing, before granting loan to such borrowers. So different methods are there, tools are there. Let's do that now. Conduct of the accounts with the bank. So conduct of the accounts means what? That is the study of the account. Study of account. See, it tells in this particular first point, it tells about the financial health of the borrower. That its account is fully managed. Okay, it does not have it, this borrower has does not done any kind of default in his previous time. Then pre overdrawings are not very more. They have repaid their money in a proper time. Okay, repayment date is not that going very far, delay in payment. So all these activities they have to look in the accounts of the borrower. That is the conduct of the account, the study of the account. Every information should be submitted as per the terms of the advances. That we should there should not be done any kind of window dressing. Every information related to all the things, submission of all the documents should be there. Audit should be done, audit of stocks and receivables. It should be not that you have shown a lot of expenses in your business. That is why you are taking the loan and you have kept all the valuables, all the stocks in the aforesight. So it should not be done. So stocks audit should be done, that yes, there is proper stocks present in your company, so you don't have to borrow more money for purchasing such stocks. Auditor's report should be there. Financial statement should be provided for monitoring the credit. The visits and inspection, that there should be proper inspection so that no borrower may do any kind of mistakes. Okay, no borrower can do any kind of fraud while taking more and more loan from the bank. Interaction between both the parties, the bankers, the lenders, plus borrowers. So there should be a good interaction, okay, between both of the lenders and borrowers. So the one who is lending the money, they should know about all the details of the borrower, that the rating, the CIBIL rating, then the repayment date, the interest date, everything related to the borrower, that might this borrower will take the loan and does the default on the repayment date. No. So as soon your NPA should not arrive, you should know each and everything of the borrower so that you cannot face such NPA. Periodic scrutiny, that is scrutiny means the you can say the overview. Here, market reports about the borrower and the business segment. If a particular borrower is taking a loan, so you should know the business of that borrower, in what business that borrower is dealing, for what purpose the loan is being granted to that borrower. Everything you should know. Appointing bank's nominee on company's board and credit audit. So these are all the tools available for market reports. You can also see that the stock, all your listed and unlisted shares, debentures, the stock shares, listed and unlisted, both. So every information should be provided to the lender about the borrower when the lender is granting loans, when the lender is disbursing loans to the borrower. So this is what the credit monitoring is. We have to monitor each and every stage of the borrower so that in future not any such kind of problem may arise. Okay, done. So this was a very small unit, very small chapter, although STP and credit rating, credit monitoring, credit delivery. So all these were the very small chapters. So I hope you have understood each and every point. What is credit monitoring? What is credit? control. So from tomorrow, we will start a new unit, new topic, and PDF will be uploaded. So you all can download the PDF. You all can go through the PDF. So let's meet tomorrow. Till then, take care, everyone. Goodbye. Keep studying. Keep watching.